The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 24th wonderful Wednesday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a terrific day. Let's make sure we do everything we can to have an extraordinary afternoon, an extraordinary evening. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. We're going to go see what the bulls and the bears are throwing at these markets out here. I'm absolutely grateful for your presence here this afternoon. I'm here to serve you, so feel free to pick up that phone, dial on in at 877-927-6648. I give you my best analysis of whatever instrument it is that you're taking a look at. Of course, internationally, you can also reach out to us at 727-445-1044. This is wonderful Wednesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down about 112 points at 18,031. S&P off 9 at 2115. The Composite's off 20 points. She's trading at 5140. Russell's off 8.5 points at 1287. DAX closed down 71 points. The FTSE closed up 9. Gold is trading back about $4. Silver's up 11 cents. Light sweet crude is off 88 pennies. Natural gas is up about 2 cents out here. In fact, the first chart that we're going to go to, one of our callers called in yesterday, Rich from Orlando. I mentioned that I would go first thing to this chart here. He is trading natural gas, both from the long and the short side out there. And what I said that I would do was show this slide right here. And this is the natural gas seasonal chart over the course of the last 11 years. Probably would be best if I had more data in here, but I haven't gone back to do that. I don't know that it would change a whole heck of a lot. But over the course of the last 11 years, this on average is what natural gas does. Now, the reason that it's important to take a look at this, now the analog here, and that's really all I'm trying to do, is see if there's an analog that would help us as traders to follow along with what the market's personality would be. You see, I say you don't want to be a prisoner of your past. And that's for you that are trying to always obtain more in life. You're always trying to break through some barrier. It doesn't matter what you have. Doesn't matter how much you have. You're always searching for, typically you're always searching for a little bit more out there. And that means that you don't want your past to be a prisoner out here. But the cool thing is that the market basically doesn't think like that. Typically, the market is a prisoner of its past. That's why you and I, we can take a look at support and resistance lines out here. Sometimes they fail. When they do, they provide us with a ton of information. Seasonally, what I can tell you is that in the month of June, and specifically from a date standpoint, that would be June. Come on, show it shows up on my other chart out here. June 18th. Where today we're June 24th out here. June 18th represents this point out here, which says that natural gas, on average, over the course of the last 11 years, from that high, typically moves down into a low that's formed sometime in the September timeframe out here. There's bumps along the way out here, but that's the normal pattern. Does that mean that's the way it's going to play out here? Not necessarily. The last low that was supposed to have been put in with any significance was supposed to be right here. That's the actual equivalent of that date, not trading day with regard to our calendar, but our calendar around the April 9th level. And what we will see as we take a look at the current natural gas contract out here was there was a low that was put in right around April 28th, maybe, and that was really the low that was put in. So has this seasonality shifted by 3 weeks? It's possible that is shifted by 3 weeks. Has it shifted back? Here is May 19th. So has it shifted back 1 month? Remember, we said June 18th, seasonality-wise, is supposed to be a top, if you will, inside of natural gas for price to then move lower. At this stage, here's what we know. So there's the information that's provided. Yesterday, when we took a look at the current natural gas contract, I believe that Rich is short natural gas. There was no bullish reversal signal. What we did see is that a natural area of support, which in this case here was your 0.618 retracement, was hit. And in fact, that's been hit now 3 times. So price has not been able to get below this 270 mark out here. The actual low so far this morning, 2.711. You're trading at 2.740 out here. You actually do have a bit of a bullish engulfing candle if the contract were to close right here, right now. Now, it doesn't take much in order to get a real bullish engulfing today because yesterday's body of that candle is pretty small out there. So it's not exactly like there's a ton of oomph here. It's not really until natural gas gets above the 279 area where this could actually turn into an A to B equals CD to the up pattern out here. Because we know that this 0.618 area has held and has held 3 times. So I would say if you get a bullish reversal signal today, pretty good chance you're going to at least do a retracement, get up towards that 296 level, and maybe you make another run in A to B equals CD, and you make a run for the high out here, this little key reversal day inside of natural gas from May the 19th. The top of that was 315. Your 1-to-1 A to B equals CD would take you up to 311 out there. So that's all the information. Well, that's all the information we have on a daily basis. If you were to switch down to a 30-minute chart out here, let's see how this trades. If we go down to a 30-minute chart, what's cool about the 30-minute chart, and I'm just popping this up on my screen for you. I had not looked at this. But with regard to intraday time frames, remember we took a look at that 0.618 retracement level. And when we take a look at the 0.618 retracement level, we notice that it held for the last 3 days. Interestingly enough, on a 30-minute chart out here, you've got 2 hammers that have formed down at this low. Now, there was one with some volume on a 30-minute basis. That was from yesterday. And that had about 6,000 contracts. And the low out there was 2.71. What's interesting is that today that low was tested with only 443 contracts. Is that right? How about that? That was at what time? Well, that was at 4 a.m. Of course, it was only 443 contacts. Nonetheless, a swing point was tested with light volume out here. Hammer candle. Hammer candles are just simply one way for the market to communicate to you and I that the market is trying to hammer out a bottom. It's why we like to use the expression, if you close below a hammer candle, if you're long, you're wrong, because it's an idea, it's an indicator, it's a tool. You got to use these with patterns out here to suggest to you and I that it's trying to hammer out the bottom of a market. And then you saw a nice little widespread, a little bullish engulfing candle that took place April 30th. I would have to say that more likely than not, you're going to see at least some kind of retracement, Rich, out here, because that 0.618 area has held. So if you like to flip sides, I'd have to say you've gotten an indication that now is the time to do it. In fact, you've gotten a retracement on the 30-minute basis out here. So let's go see what kind of retracement level we've got. Is it 618, 786? Looks like a 0.786 retracement to me. Yeah, pretty close to a 0.786 retracement. That's off of that low here this morning at 4 a.m. to a high that was put in at 8 a.m. and then a bit of retracement. So you could be seeing an A to B equals CD to the upside that's forming on the intraday time period. So hopefully that helps you out. Now, let's go get to our markets out here with regard to what are they doing out here. What are they thinking? What are they thinking? What are the bulls and the bears thinking out here? Well, let's go try to find out. We've got the Dow off 114 points. What does that mean to you and I as we speak right now? Well, let's go take a look at our summation index for the Dow. And what we're going to see here is that 114 points may not seem like a lot of damage. And, of course, this chart here doesn't mean a whole hell of a lot of beans until we get to 4 o'clock. But let me tell you what it means at 115. Because 115 points is nada. That's just a sneeze, if it's a sneeze at all. That's a little runny nose out there. That can be cured with a little bit of a vitamin C out here. But at this stage of the game, there's actually more damage that's been done inside the Dow than that 115 point shows. If, in fact, we were to see a close right here, right now, 1:15 p.m. was to be the close of the market, what Stevie would tell you is the bears have taken control of the market. Oh, couldn't even get that out, could I? Don't eat sweet potato chips before you come on the air. That's not a good thing. I think that was a sweet potato chip. It was a piece of salt or something. In any event, I'll squeeze it out, I promise you. At this stage of the game, if we were to close right here, right now, with the Dow being up near its highs, you know, yesterday the high inside the Dow, what is it, 18,188, the all-time high. As we speak right now, we're not that far from it. 18,351 is what it looks like. So you're looking at about 300 points out here. This is telling us, and we see a little bit of a declining tops in the price oscillator out here. That's never a good sign. It's never a good sign to see that and then have the oscillator close below zero. So if we do get a close below zero, it says that, hey, there's going to be a rendezvous of price moving lower. That price moving lower probably down to about the oversold level of its price oscillator inside the minus 2.5-ish area before, in fact, the next bottom here forms. Where that takes us in price, I don't know. It all depends on how we get down there, how gradual we get down there, or if it's one big swoop. But what I can say is if, in fact, the market closes here right now, the Dow is giving you a message that it's kaput. It's done. It's done, at least for the time being. Now, what's interesting here is if you and I go take a look at we looked at this yesterday. We ought to look at this again here today. No, that's not what we looked at. We looked at this chart out here. Cool chart, because what it does, it gives you and I a snapshot of the 4 different daily futures contracts to tell us what is there harmony, are things traveling in unison out here? And the reality is that they are. The upper left hand side of this chart here is the Russell 2000. Russell 2000 made a 1.272 expansion of a set of swing points out there. Oftentimes, that's an area where a market will just simply, it's like you stretch the rubber band. That's a swing point high from April 15 down to the low on May 5th out there. So it makes the 1.272 expansion. Now you got a nice big old bearish engulfing candle inside the Russell 2000 on its daily futures contract. Remember, this has been strong like bull out here. So for this to give you a bit of a reversal, that says a pullback. Where's that pullback? I don't know. We can take a look at that. But right now, we're just looking to see, hey, are these markets singing to us? Are they singing? What's the choir doing here? Well, part of the choir is the deep baritone from the Dow futures contract, the upper right-hand side of the chart. We know that yesterday, you and I took a look at this, and it made nearly an exact 0.786 retracement. 18,111 was the number. It actually got up to 18,108. You got to love it. Now, bearish engulfing that candle out here. That is a reversal sign. This would say that, hey, the next piece of information inside the Dow futures, 17,894 is the number inside, by the way, inside the Russell 2000 is going to be the 1266 level, where it provides us with some information. Lower left-hand side of the screen is the ES Mini. That's the S&P futures contract. It has rejected its swing point, the bottom of its swing point, the bottom of the swing point from the trading session of May 19th. May 19th is the swing point high. It's also the low that we're taking a look at. Price not been able to get up to that high of 21.26. You do have a reversal that is going on today. The key is going to be, as we take a look at this daily chart, as we look at the August, the October. We take a look at the September contract out here. What we will see is 2102 is probably a key level of support. If we see it close below that, you're likely to see a move down to 2076, maybe 2066 out there. And the lower right is the NASDAQ out here. Still strong like bull, but what the NASDAQ is doing, giving us a reversal signal here with a triple top. A triple play is inside the NQ. That first top was April 27th. That second top out here was May 27th. And that third top looks like that was this morning. So we'll go take a look at the intraday charts and anything else that you'd like to. This is Steve Rhodes with TFNN. Thanks so much for being here with us, folks. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 133. S&P is down 11. Composites off 27 points. So we looked at the daily contracts, the daily futures contracts out there. We'll go take a look at the ETF structures here in a bit. I'm going to go ahead and fill in and do Tom's show for him from 3 to 4 today. So we'll space out a little bit of the charts that we take a look at out here. But where we've got uniformity, we've got synergy, inside the daily charts. We don't have that same kind of synergy inside the intraday charts. And well, let's first do this. The chart I think that is of most importance to you and I is going to be this one here. It's a 5-hour chart for the Russell 2000 futures contract. Now, if we take a look at it, and we'll get my cursor going here. If we take a look at this little bullish bull sash candle that formed at 2 p.m., and that was on June 14th, June 15th, June 15th out there. What we have off of that, we've got a nice little 7th inning stretch count up to the high that was put in here at 6 o'clock yesterday, and that's up. It was June 23rd. That high was 1292.30. It's at that 7th inning stretch where you can oftentimes get the largest and swiftest corrections out here, and so we are seeing the Russell 2000 pull back at this stage. At 1280 level is going to be a key area area of support for the Russell. If it breaks through that on a 3-hour or 5-hour chart out here, it'll indicate that there is a change in trend that is going on. Now, how far, where that change in trend takes us to, you'd start taking a look at different retracement levels out here. If I look at a 30-minute chart here for the same contract for the Russell 2000, what we're going to see is that it's currently in its 5th out of 7 moves to the downside as we speak. But, it's broken a hammer candle on the way down. Again, just a 30-minute chart, just the opposite of what we looked at in natural gas, where we saw a couple hammer candles that actually held out here. So this says it's got a bit to go further to the downside. At 1280, very likely going to be the level that at least gets tested out there. May just slice right through it, but that level is going to be tested. So I think the Russell 2000, from strength is where we learn a ton from. Now, the other chart that is of interest at this stage of the game, 30-minute chart here for the ES Mini. Let me update this. Let me just see, because I've seen it's moved down a few more points here just in the last few minutes. Let me just update this and see if there's still a price relative strength divergent pattern brewing. No, there's not. So the pattern that was brewing here during that last 30-minute session at 1 p.m. with a move down below that, we've seen a move lower with more weakness, measured that using the relative strength indicator out here. And so that being said, that's kind of like nothing to actually worry about as we speak right now. It was not the case when we went to that breakout there. Okay, so that's what's going on intraday. Now let's go take a look at currency pairs, and let's take a look at commodities just to get a feel for what's going on. Let's start off by taking a look at the euro Japanese yen. As we take a look at it, and this is the 30-minute chart. We don't want to look at a 30-minute chart. We want to look at a daily chart out here for the euro Japanese yen, see what it's doing. So we had a decent pullback price-wise yesterday. Just a little bit of a bounce here this morning, this afternoon. We're already in the afternoon. But not any kind of a bounce at this stage here. That it's really just moving sideways. So there's nothing significant here inside the euro Japanese yen to spell curtains for the market, because this is a carry trade. This is an important currency pair out here, but it's moving sideways, so it's got no impetus to the upside or to the downside as we speak right now. So it's not tipping its hand, so to speak. If we go take a look at the VIX index, see what it's doing, $13.11 is what it's trading at. 13.78 is your 50-day exponential moving average. But if it gets up to 13.78, you see right now you got an 8.26% one-day rate of change. I'm pretty certain if it gets up to 13.78, which is the 50-day, you're going to be more than 10%, and what you can expect is a bounce tomorrow. How much of a bounce? That's yet to be seen, and we're not there yet. So I don't know how the VIX is going to close out the trading session. But nonetheless, still below the 50-day. That is bullish out here. You get above 13.78 with certain conditions, certain parameters. That's when you can start to see some real deterioration inside of the market out here. If we go back and take a look at the euro versus the U.S. dollar index, let's go take a look at it. Click on that. There we go. Let's take a look at the chart. Still in a nice little uptrend here that has not been tested. I do suspect that that's what the euro is going to do. It's moved down to the bottom of that rising price channel. Hasn't been in place for a long time, just since the middle of April, those lows. We're just taking a look at the bodies of the candle. It's a good rising price channel out here. Suggests that the euro gets down into about the $1.10 area, 1.10. Depends on what day it actually hits that. But that looks like where the euro is headed, with the Dow off 145, S&P down 12, composite off 31. Summation index, we got the NYSE below zero as well. The only one that's holding out so far is the NASDAQ composite. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 140. S&P is down 12. I have to retract a statement I said earlier. I just took a look at this. The 30-minute bar just completed while we were on that break. Apparently, I had a setting on my system here. This is a 30-minute chart that we're taking a look at. One of my automated systems out here, which helps us to identify price relative strength divergence. I had it set to only look at bars on the close. So my apologies. We do actually see here on the 30-minute basis that price has been moving lower with less relative weakness out here. Now, no bullish reversal signal or anything along those lines, but it is something to pay attention to with regard to trying to understand the ebbs and flows of the market. Now, at this stage of the game, so long as the ES-mini stays below the 2111.75 here, that's that blue horizontal line on my screen out here, that should now become any kind of area of resistance inside of the market should we see any kind of bounce. I don't think we're there just yet in the game until you see the bulls actually show up. they are just simply still out to lunch at 135, maybe having one too many drinks. They may have so many drinks out there on a wonderful Wednesday. Is today Wonderful Wednesday? Yeah, Wonderful Wednesday. That they may just say, hey, it's summertime and forget to come back to work, in which case the market will continue to move lower. The cool thing about the different patterns that you and I trade, and is that we get to look at the signs that the bulls and bear paint for each of us each day, and you want to make sure that you understand how to utilize those candlesticks out here. Now, we looked at the euro yen, the euro US dollar. We didn't take a look at the Japanese yen, but it's not doing a whole heck of a lot, is it? Let's go take a look. Not just really moving sideways out here. But I did hear that the Nikkei itself had quite a party last night. So let's go take a look at the Nikkei, because I have not looked at that here today, and I should have. Up 58 points, closed down to 20,868. What is the Nikkei doing as we speak? Well, it made the 1 to 1.272. A to B equals CD. That price objective would have been 20,942. We saw a price high intercession today, 20,952 out there. So it's made that no bullish, no bearish reversal signal. Let me put this on a longer-term chart out here. Let's put this, I probably should put on a quarterly, put on a monthly. So what has the Nikkei done? There's a lot of partying going on out here, but in reality, what the Nikkei has done, it's really right up against resistance. Thanks for asking me to put the monthly chart up on my screen. So it's made the 1 to 1 A to B equals CD pattern. Here, we know that, made the 1.272 on the daily chart, but it's also run all the way back into resistance from the year 2000. So that's really right, just about at it. 20,000, 20,000, I should say. 809 is the number, and the actual close here as we speak this morning, early this morning our time, was 20,868. So it's closed up just above that level. Now, the positive news inside of the Nikkei is that it's more likely than not headed to the 26,934 area. It's up above the 0.382 retracement. If it can truly clear this 20,809, it looks to me like that's where the Nikkei ought to head to. Back to our U.S. markets out here. Let me see what we've got. So we looked at the currency pair. Great British Pound, we haven't looked at it, although it's not doing much as we speak here today. However, what it is doing, what it appears to be doing, I did close below, or it is trading below. It's that TAS market support level out there, the bottom of that box. That says the price heads down to the bottom of its rising price channel. That's somewhere in the range of about 154, 155. Somewhere right around there. So it looks like that's where that currency pair. Let's go look at the hard currencies out here, see what they're doing. Gold's back $3. As we take a look at it, it's basically doing nada. But what we know that gold has done is the following. What it has done, it's trading inside the swing point. That's a swing point from June the 5th out here. And as long as it trades inside that swing point, it has tested the bottom of its TAS market profile in the 1170 area. But as long as it trades inside that swing point, could very easily get down and touch 1162. Let's go to Garo in California. Garo, thanks for calling. Thanks for holding. How are you doing this afternoon?
Thank you, sir. Thank you for taking my call. How are you?
I am doing very well. Thanks so much for asking. You're trading Ambarella. Tell us what you're doing, how I can help you. What's the time frame it is that you're using to make your trading decision?
I'm a day trader. I don't hold more than 2-3 hours.
Okay.
And then I go from one stock to another. But it's been I've been going long for about a couple of months on AMBA. Yep. And now I'm short on it. Today it didn't give me any opportunity to short it again. It's going very flat, so I didn't touch it. I want to ask your opinion regarding, will this reach to 50-day simple moving average on a 6-month chart somewhere around $88, or this is the bottom, or it will pass by that point?
Well, if we take a look at the 50-day, now you used $80. Are you using a simple moving average or the exponential?
Simple,
you must be using simple. Okay. So if we take a look, you know it does look like that would be a pretty decent target area for you, the 88 level, which it has tested several times. You take a look at that simple moving average. You know, that's really held a support since the early part of 2015. If I take a, now, in this case here, you say you don't hold something usually for more than 2 or 3 hours. Is that still
Yes,
the case inside of Ambarella?
Yes, sir. Absolutely.
Okay.
I may trade maybe 2-3 times a day, but as soon as I get a few dollars, $1.50, $2, I get up, get out, and then if you give me another chance, again, I'll get in. And if I make another $1.10 or 90 cents, 80 cents, I get out, and
Sure.
that's how I work. That's how I work.
Okay. So would you use a just so I can take a look at a similar time frame chart? Are you looking at like an intraday chart, like a 30-minute chart at all, or what's an intraday time frame that you would look at?
Between 15 minutes and 30 minutes.
Okay. So, Garo, let's look at a 30-minute chart just to see what kind of message that we have here. And that was that yesterday at the open between 9:30 and 10. I'm sure you saw that. There was some pretty good volume that came into this equity, so 4.4 million shares. And you're exactly right. Ever since that trade, everything has gone flat, like a deer. Like, the equity looks like it's a deer in headlights. I don't really think you have a ton of information until you see it either clear the top of that at 104.36 or probably the bottom of that, 98.20. You know, if it clears the bottom of that, whoever came in on this equity, they will not have held support. And because you like to trade it for maybe just a couple of bucks, if it gets below that blow of 98.20, pretty good chance it'll go test that swing point down around the $93. So you could easily clip a few bucks off of that. As we take a look at the 30-minute chart. Let me see on the 15-minute time frame what it has out here and see if there's any other. The other thing on the 15-minute chart, if we take a look at just simply the supply and demand of its TAS market profiles, it says that the $100.08 is a level of support. If it breaks through there, price probably comes back and tests the 98.20 area, so that could give you a couple of bucks.
Right.
If it closed below 100.08. And likewise, if it gets above 102.65, what I would say is this could run up to probably the low on the 15-minute chart, the low of that bar from June 22nd that had 2.8 million shares, probably the 107 area. So I would use that as an Ambarella as really your intraday guidelines for trying to scalp a few bucks, either to the upside or to the downside. Or are you only going to play this to the downside at this stage?
At this time, only downside, nothing up.
Okay. Well, then ideally for you, it'll make its way all the way back into that June 22nd bar right around the 107 area, and that would be a place where you could certainly pull a trigger. Because at that stage, I think even on the short-term chart, Garo, I think you have an A to B equals CD pattern that could set up there. In fact, on the 15-minute chart, 109.83 would be the number, and it gets you right into that bar from June 22nd at about right at the open from 9:30 to 9:45 out there. So those would be the parameters. Go ahead.
Yeah, I can see that. Yeah, absolutely. The numbers matches my numbers. Absolutely. Very, very good. Very good. Very good.
I like that when we think alike.
Yes, sir. Yes, sir. Thank you so much for your idea. Thank you, sir. Thank you.
You bet. Thanks for calling. It was Garo in California. Just take a look at how he might be able to utilize the tools that we have here at TFNN. We've got these beautiful TAS market profiles. They're kind of like your highway, your intersection that helps you to identify support and resistance, traffic areas, really. So that assists in trading. We use those traffic areas. I'll switch back to the daily chart down here just so we can take a look at that on Ambarella. And at this stage here, it's below the support area. The next level of support inside of this equity, should it continue to fall from grace out here, takes you back to March the 4th. And at March the 4th, that's actually going to get lower than that 50-day simple moving average that Garo was taking a look at. So if it fails at the 50-day, what I would say is this equity could trade back to 68.50, 64.30. That's where it had broken out back in March of 2015. Again, ticker symbol there, AMBA. If we take a look at Let's see. So we're looking at the currencies. We looked at gold. Did we look at? I don't think we looked at gold. If we take a look at gold again, I don't think there's a ton here. There's not a ton here for me. This chart here, we look at gold price in euros. That's at the bottom of the screen. Gold price in U.S. dollars. That's at the top of the screen. The next trade inside of gold. Now, I'm not talking in intraday. You know, if you're trading a 30-minute chart or 15-minute chart, there's plenty of other trades that do show up. But from a daily swing type of perspective out here, you'd really like to see gold get down and test that bottom of the top of that green line on the upper panel of my screen, and likewise the blue line on the bottom panel of my screen. That is the level of what I say or suggest to you is a level of support as gold priced in euros, and pulling back to that area would be pulling back into an area where it broken out. If it can hold that 1,000 euros, then we should see gold bounce from there. But now remember, gold is in a significant downtrend out here. And that downtrend, priced in U.S. dollars, that downtrend that I'm referring to just takes you back into August of 2013. It's in a much further downtrend than that if you go back even further, but we're just going back a few years into the 2013 timeframe. With regard to silver, I believe silver here had broken through its swing or broken through its 0.786 level here. Yeah, it did that yesterday. Is it traded into the swing yet? Yeah, it has traded into the swing, so this is kind of interesting. Let me go ahead and get rid of this on my screen. Let's get rid of the retracement for right now because we know that it got below that area. So here in silver, the line that we're going to go ahead and draw on this chart out here is going to be the high of the March 11 swing point. That's at $15.76. Now, you had pretty good volume yesterday inside of silver on the way down. And today you've bounced off of that 1576. Does that mean anything? Here's what I would say in the case of silver, is that you see how price today has also bounced into the old support line, which may become new resistance. There may be a change in polarity here. That's on the daily chart, the TAS market profile at the 1587 area. You're at 1586, so you're right there right now as we speak. You know, if it can't get above that 1580, let me make sure you use 1587, 1588 is what I would call it. If it can't get above that, then you're likely to go ahead and see this thing go down and test the bottom of that swing point. The bottom of that swing point takes you down to a price level of $15.31 out here. And that's in the case of silver. Not much going on really in light sweet crude other than Stevie. Well, it's back $1.10. Let's go see is there any kind of damage here. I suggested to you yesterday. Well, let me go see if I can find that chart. You know what I'm going to do, because we only have 2 minutes to go into the break here. I'll try to find it during the break so I don't don't use up this valuable time. But what is light sweet crude doing daily? On a daily basis, not doing anything. It's just moving sideways between $57 and $61 out here. You know, right now you're trading at $59.92, so not a big deal. But I do believe light sweet crude, for whatever reason, it is getting ready to coil up and make its next move, which should be to the upside out here. So that's what's going on with it. So we've covered the commodities pretty much. We've covered the currency pairs. We've covered what's going on inside the markets. A quick peek at the summation index out here. The NYSE below zero, the Dow below zero, and the NASDAQ composite is reaching for that level. Just probably needs about another 30 or so net declining issues for it to get below its zero line. When you get below the zero line, it says that the buyers have lost control of the marketplace. You know, you don't know what the sellers are going to be able to do until they have the full day. But it does say that change in trend is underway, at least for a short period of time out here. And that is right now with the Dow off 144, the S&P is down 13, the composite's off 33. We get back from this next breakout here. We'll go see if Stevie can find the Canadian dollar chart, the Mexican peso chart. We'll go see what that's doing with regard to light sweet crude. And then we'll go take a look at what will we take a look at? We'll probably take a look at maybe a couple of the ETF structures, whether it's for the index ETFs, or maybe we'll take a look at what's going on inside the S&P 500, like the XLK, the XLF, and the XLV. Three of the top weighting ETF sectors within inside the S&P 500. Dow off 143, S&P down 13. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 145. S&P is off 13. I've got a question that is coming by email. Let me go to the chart. It's with regard to the SPY. So let's take a look. And let me turn a couple of things off, and then we'll go to the question. So we'll just clean up the chart. Makes it a little bit easier to look at. This. Gone. The heck happened there? Okay. The question is this. Could I take a look at the SPY daily chart and tell you if the candlesticks of the past 2 days are known as the double abandoned baby pattern, also known as abandoned twins. Who would want to abandon twins out there? If we take a look at it, the answer to that question, now, what I would need to do is show you what that pattern actually looks like. First, the answer to your question is no, it is not a abandoned baby top out there. What you would have for an abandoned baby top would be, let me see, could I even figure out where I would draw that in here? Well, I guess I could. I can't really. Well, first, in order to have an abandoned baby top, basically what you would do is, let's see, can I draw a line? Yeah, I can draw a line. Let me do this. Let me get a line chart. It would look something more, if it were to occur, it would look something more like this. And let's just say we're more like a doji candle. So what you've got to do is use your imagination. Let's assume what Stevie just drew in here was a doji that occurred here June 22nd as an example. And so don't think about these candles down here over the past couple of days. Just look at that wide-ranging bar as the green candle out here. In order to have an abandoned baby top, it is an island reversal, only it's really done with a doji candle. For the most part, is that what you would have is you'd have a gap up. And you would have had a gap up from the June 18th candle. That means there would have been a gap in price between its high of 213.34 and something up above that. Then on the very next trading session, or in this case here, he was asking about a double abandoned top. You would have had two doji style type candles over 2 days, meaning June 22nd and then June 23rd, and then today being a gap down. Now, here's what I will tell you as well with regard to taking a look at the SPY and using some of those reversal signals inside the SPY. Don't forget that the SPY is really the underlying instrument for the S&P 500, and so its candle formations may be different. And those are both taking their cue off what's going on inside of the S&P futures contract out here. So you really have to go ahead, my opinion, is that you really need to be able to use all those charts combined in order to understand what the real reversal signals are. And whereas if you were just trading an individual stock and you found an island top or an island bottom or an abandoned baby top, whatever it is, then they would have more meaning because you don't have any kind of underlying instrument other than the individual equity itself. So with regard to some of those reversal patterns, always be careful in understanding, what it is, where that message is really coming from out here. But a good question, but it is not any kind of reversal signal inside of the SPY as we speak with regard to yesterday, the day before, even today out here. Now, that's a different message, right? We take a look at the SPY versus when we came back and we took a look at what went on in the daily futures contract here. Again, you don't need to trade the futures, but what you do want to know is what's going on inside of them. And inside of the futures contract, the daily, what we know is price was dealing with the swing point from May 19th. It was the low. It never got up to the high. And today, you've got a bearish engulfing candle at an area of resistance. Now, it's running into an area of potential support, old resistance, the TAS market profile. We talked about that 2102 level. You break below that, price likely pulls back to 2076. It probably doesn't do it during the next hour when we're handing this thing off to our squeezably soft David White out there. But maybe it does half during that time period and the other half when I come back from 3 to 4 to fill in for Tom today. Folks, thanks so much for joining us here. Have a great Wednesday, and I look forward to seeing you soon. Take care now.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.